This is a market that's based on Wall Street making money. It's a trading market. Everything has been turned into a commodity. Why is that okay with you? And do you realize it? Because most people don't. They just live their lives thinking everything as normal as possible, when in fact, the prices are not based on real supply and demand. We've been talking about that forever in both gold and silver, because a rise in gold price is an indication of a failing currency. Do they want you to know the currency's failing? No, they do not. And oh, by the way, silver, SLV had to change its prospectus because they couldn't get their hands on silver, but we still see spot in the 20s. Okay, so they know how to manipulate a market to make it look anything that they want it to look like. And you and I are the ones that pay the price for it. Or we're smart and we take advantage of it and we accumulate it. That's what smart money's doing. That's what central banks are doing, though they don't care about the price because they can just print at will. If you hold all your wealth in the system, then you're gonna be in deep trouble. If you hold gold, if you hold physical gold and physical silver in your possession, you're gonna be able to weather this storm. This is the foundation of your money. Because after all, gold eases as US jobs data lifts the dollar and yields. And why does it do that? It lifts because it pushes the central bank to raise interest rates. And in theory, and this really is just in theory, that means that the dollar is more attractive. So, hey, because after all, gold doesn't pay you any interest. Gold doesn't have to pay you interest. It's the safest thing that you can do. So my question to you is, with these fiat money products, why would you risk your entire principal for a teeny pickup in yield? Why? This is the time to be protecting your wealth, protecting everything that you've managed to accumulate. Don't be fooled, because the Bank for International Settlements says it best. Unlike currencies and debt and everything that is not physical gold and silver in your possession, it's all a debt instrument. It's all contract based. So unlike currencies and debt, which are claims on foreign governments or institutions, how are they doing these days, really? Gold kept at home is not subject to political manipulation. And man, oh man, do we have political manipulation all over the place. And let's just take a look at part of that. What now for the Fed? It has fallen behind the curve again. The central bank downshifted rate increases too early and now faces a set of dilemmas and another knock to its credibility. It is all about credibility. Fed now falling behind on its inflation fight for the third time in just 2 years, and what that implies for its already damaged credibility. This is a con game, and all con games require confidence, and all levels of confidence other than the public, which has eroded. But it hasn't disappeared because people don't pay attention. And you're watching this and you're all probably, or many of you are sitting there going, yeah, I tried to tell my family. I tried to tell my friends. They don't want to hear it. No, but you have to be kind and you have to be patient, because what we're trying to do and what you're trying to do for them is to help them have a paradigm shift where they start to look at things just a little bit differently. Because when you do, it's amazing what you see. So it's all about policy credibility, that 2% target, resuming 50 basis point increases and essentially negating much of the previous forward policy guidance would constitute yet another significant hit to the damaged standing of the Fed. But not responding to a set of unfavorable inflation data surprises is also bad for its credibility. They are between a rock and a hard place. It doesn't really matter what they do, but the reality is they don't even want to try to kick this can down the road anymore. It's too late. We are at the end of this road. So are they pushing us into crisis? Highly likely. And they wrestle with it. Whoa, this new inflation data that just came out, is it just a blip or is it a warning? Well, in my opinion, it's a warning. Last month, we received a barrage of data that has challenged my view that the Federal Open Market Committee was making progress in moderating economic activity. In other words, they want more unemployment and reducing inflation. Now, it was interesting because what the Fed and the committee is talking about is raising the unemployment rate by 1%, which is over 2 million people that would lose their jobs. And that way they would have trouble paying their mortgages, their car loans, their student loans, whatever debt that they have. But hey, then they wouldn't be able to go out there and spend because it's the public that's causing the inflation. It's not the overheated profits of the corporations. No, we just want price stability. What really is their definition of price stability? Because it's different than yours and mine. I would think that price stability means you want prices to remain stable. But when they're talking about price stability, they don't want you, the public, to make choices based upon inflation. They don't want you to ask for that raise. It's okay if the CEOs make a whole lot more money, just not you. It could be that progress has stalled, or it is possible that the numbers released last month were a blip. I'm going to tell you, it's not a blip. It's not a blip at all. It's a warning. Will you take heed? I hope so. Because supply chains have healed, yet their mark on inflation to endure. Bulk of goods transported under contracts are set at higher rates. So what they're really talking about here is oceans, so ships, trains, planes, because of the energy prices. Retail chiefs say the worst is over, but price pressures remain. Remember, it takes a while of working through the system before the impact happens. So what we've got here is the goods inflation part that is kind of going down, but again, the transportation contracts are set at higher rates. That hasn't come through the inflation yet, but it will. Absolutely, it will. Across the board, you have higher costs. So that's going to have to translate to higher freight rates and higher prices for you. Because are the corporations willing to make less profits? Not if they can help it. Now, they might not be able to help it. And I'd say hallelujah to that. Because for them, this has been a huge boon. Huge. And mark my words on this. Higher inflation is on the way. So maybe they'll do 50 basis points. But history has shown that you have to go above the real rate of inflation to really have an impact. You have to have a whole lot higher unemployment. We have to feel a whole lot more pain. And as we get that higher and higher inflation, the public confidence in the central banks, in the currency, in the government declines. And it's been declining for a while anyway. But good, because they are acutely aware of the trouble that inflation is causing. They did a report on it. The fundamentals for household spending appear to be somewhat less supportive of spending growth. In other words, people are starting to spend less because the real inflation adjusted after-tax income has actually declined. So all those wage gains that they've been talking about, no, in reality, it's the tool that they've used since the beginning of this big experiment. Nominal confusion. You had a $20 bill 20 years ago, 10 years ago, heck, 6 months ago, heck, 1 month ago. We all now realize that it buys a whole lot less, but nominally, they're both $20 bills. So they are both absolutely identical. Don't be fooled by this.